Hey everyone, welcome back to the channel. In this video, I want to show you a stock that has the potential to be the next Berkshire Hathaway. And this is a stock that I'm pretty sure you haven't heard of before. And as you're going to see pretty soon, this stock has a lot of connections to Berkshire Hathaway and Warren Buffett. So stay tuned to learn what this company is, what they do, and how they have the potential to become the next Berkshire Hathaway. And obviously, this isn't financial advice. It's not a recommendation to buy this stock, but I do think this is an interesting company that does have a lot of potential going forward. All right, so as you can see from the screen, the company is Boston Omaha Corporation, and they are an insurance company with a lot of other things. They basically act as a conglomerate similar to how Berkshire Hathaway operates. And we're going to start with the management of this team because that is where the most obvious connection to Warren Buffett actually is. So here's this article on MarketWatch. A Buffett-run firm is on a roll, but Warren has nothing to do with it. And so the co-CEO of this company is Buffett Rozek, and he actually is related to Warren Buffett. You can take a look down here. So this company is actually run by Warren Buffett's grandnephew, and you can see down here he is the grandson of Warren Buffett's older sister, Doris Buffett. So that is pretty cool. A company that is being run by someone in the Buffett family. Now, this doesn't mean anything about the business. He says they get no help from Warren Buffett or Berkshire Hathaway in any way, but there is that name value there, and that is something we'll get to when we talk about the valuation of this company. So here is what Boston Omaha actually does. They are a public holding company with businesses in several sectors like advertising, insurance, telecommunications, and real estate. Their principal objective is to grow intrinsic value at an attractive rate while seeking to maintain a strong financial position. And so I like this little thing on their website where it tells you, what kind of companies that Boston Omaha owns and the size of them. So we can see their largest ones are Wyatt Outdoor. That is the billboard company. So one of the main ways that this company makes money is they own billboards and then they receive income from advertising on those billboards, and then they use that to invest in other companies. Same with Key Outdoor, which is also in the billboard space. And then they also have a casualty and surety insurance company. And so like Berkshire Hathaway, this company owns a number of core businesses that brings in money for them, like the insurance company that brings in float, and then it allows the management to allocate that capital to be able to invest in different companies and grow Boston Omaha as the holding company. So the company is run by a relative of Warren Buffett. They operate in many of the same businesses that Berkshire Hathaway does, and they also write an annual letter, much like Warren Buffett does at Berkshire Hathaway. So we can take a look at this letter to see if there's any important insights into how the business is run. So in this letter, they talk about how equity has been increasing for Boston Omaha, and so like Berkshire Hathaway and insurance companies and holding companies in general, book value per share is generally a pretty good way of valuing the growth of the business and what their true value really is. And if you take a look, since this management took over the company in early 2015, book value per share has grown a compounded annual return of approximately 16%. So this is a very solid growth rate, and we'll get into some of the other metrics of this company later in the video, but that shows that the management is successful in being able to reinvest profits to be able to keep the equity of the company growing. And so they recently bought out a broadband provider called Airbeam, and so the management basically talks about how that's going to affect their operating results for a while, right? There's going to be huge capital expenditures, and because of that, there's going to be accounting things like depreciation charges that are going to affect the company's earnings. And so management suggests that to track the intrinsic value of this company, book value is one part of it, but there's also more than that, right? They say book value per share is just an approximate figure for figuring out intrinsic value, but if the intrinsic value is growing, it's usually a combination of growth in the book value or the equity and the earnings power or the cash flow. So that gives us insight into how this company is measuring progress. It's not only based on one thing like book value or earnings, it's that it's a combination of the book value plus the future earnings power of the company. All right, so we can take a look at some of the results of this company. So revenue growth has been outstanding, where you can see in 2015 it was 722,000, and in 2019 it ramped all the way up to 41 million. So obviously growing very quickly. Here are the growth rates. It looks like it's triple-digit revenue growth every year since the current management took over. Now, in terms of net income, the net income has been negative, right? This company hasn't turned a profit yet. I don't really see that as a huge deal. The earnings will come in time. And obviously right now their priority is investing into different businesses. And so their concern isn't net income at the moment. But we can take a look at their cash flow, which, as I've said in the past, provides what I think a better picture on how a company is actually performing. And they recently broke positive for the past 2 years on net operating cash flow. So that is a good sign, seeing the company become positive on a cash flow basis. That'll help them out a ton because they can then take that cash and invest it into even more businesses. And just like operating cash flow, free cash flow also became positive in 2019 as well, which is an encouraging trend. All right, so now we can take a look at some other parts about Boston Omaha. So their ticker is BOMN. I don't think I mentioned that earlier in the video, but there's a couple interesting things about this company. So first is they have $6.63 of cash per share. Currently they're trading at $17. So this company, like Berkshire Hathaway, is holding quite a lot of cash on their balance sheet, probably because like Berkshire Hathaway, they expect to be able to pick up different companies at distressed prices at some point in the future, which I think is a pretty smart move right now. They have basically no debt. I think they said in the letter their holding company has no debt, which is very good, and obviously with all the cash loaded up on current assets. So for this company, the book value per share is currently $15.42 per share. And so like I said, this is how I would value this company, looking at the book value and how it's been growing. And so right now, this company is not at a huge premium to that book value. They're at $17. If we take a look at the monthly chart to see how this company's performed over the longer term, you can see this company was, over $20 for most of its time trading, and a couple times it cracked over $30. And so that is probably part of, just who's running this company, the fact that they're a relative of Warren Buffett. It has that name value in there that a lot of investors saw that and rushed into this stock. So historically, they have traded at quite a large premium to book value, but right now is actually one of the lowest prices that this company has traded at. And it's a point where you could buy them just over book value. And a couple of times this year, they traded actually under $15, which would be you could get them at a discount to book value. So am I buying this stock? Probably not. They're still definitely a speculative play. Obviously, if you look up their stock, there's going to be articles talking about how they could be the next Berkshire Hathaway, and if you invest $1,000 now, it would become $5 million in 40 years, and maybe that will happen. I don't know. But I would say right now it's pretty much impossible to tell. And so like I do on this channel, I like to buy companies when they're at a discount. And so in terms of this company, I would consider them undervalued when the stock price dips below their book value, which currently is $15.42 per share. And that is increasing. It's been growing at, I think, 16% a year. So I would consider this stock a good deal if you could pick it up below that price. Again, even though it looks like this company could potentially have a bright future if they just keep executing on what their business plan is, a little too speculative for me for now. Maybe this is something I'd throw a small amount in and just hold it for 20 or 30 years and see if anything comes out of it. But I just wanted to share this opportunity with you because I think it's a pretty cool stock. You always hear people trying to find the next big stock, like the next Berkshire Hathaway, the next Apple. And so here's a company that potentially actually could be the next Berkshire Hathaway. Obviously, they're nowhere near there now. Their market cap's under 500 million, but it looks like they're attempting to follow the same blueprint as Berkshire Hathaway did back when they were just getting started. So let me know what you think about this stock, and if you do think it would make an interesting buy at these prices. And if you like the stocks that I bring you on this channel that aren't talked about anywhere else on YouTube, do me a huge favor and hit the like button on this video to help out my channel. Greatly appreciate it. And if you're new to the channel, subscribe right now and hit the bell icon so you get notified whenever I upload a new video. So that's it for now, and I'll see you on the next video.